that capture a billion.
Good afternoon to all our viewers. You're watching Countdown right here on Bloomberg Quint. A lackluster beginning to the new series of December. But the markets for now, from the highs of the day, have petered off quite a bit. So 10,850 on Nifty, down tenths of a percent. But let's quickly run you through the headlines for the time being and then take you through all the moving parts of the market. It's a muted start to the December series. Markets are off the day's high and are trading flat. The Nifty trades around the 10,850 mark. IT and real estate are the top gainers. Housing finance companies gain after the RBI relaxes securitization norms. Yes Bank snaps a 5-day losing streak and is the top gainer on the Nifty today. And India's second quarter GDP is expected to grow at 7.5% according to the Bloomberg poll. Numbers come out in the evening. Well, good afternoon, Neeraj. It's the start of the news series, but a muted one at that.
Yeah, one would have hoped that we would have had a fifth day of gain, and that would have been a first in a number of weeks, to be honest, Devina. But yeah, not quite there. Maybe it will improve as the day goes by or as the afternoon goes by. But for now, trading very, very flat in the session today. 10,851 for the Nifty 50. The Bank Nifty, not really at the lowest point of the day, but probably one reason why the indices are trading very flat. But remember, it's not necessarily only the banks which are doing this. I think the heavyweights have just petered off. The Reliance's, HDFC banks are not participating. And that's one reason why the indices are a bit soft. We'll get to that. Just bring up the market breadth and the mid-cap and the small-cap indices once. The last 4 days, the mid-caps and the small-caps have underperformed. In today's session, a bit of green on the screen for both the mid-caps and the small-caps, and in stark contrast to what the large-caps have done. So the market breadth too, marginally positive, but almost petering off and about even Stevens currently. So actually third day on a trot when we're absolutely flat on the market breadth. Quickly, let's get the heat map up on the screen and show you what's happening at the large cap end of the spectrum. More red than green. At the start of the trading day, the picture was almost four rows, or all 80% of the stocks were in the green. Not quite so anymore. All marketing companies and HPCL in particular under taking a bit of a stick. Tata Motors on news is down in the session today. Yes Bank is not in the list of the top 10 losers. Bharti Infratel corrects a little bit. UPL corrects a little bit. But as I said, banks it is. So ICICI Bank down about a couple of percentage points. IndusInd Bank, Axis Bank down about a couple percent apiece. And SBI too trading with marginal losses as the HDFC Bank. One stock, Yes Bank, the top gainer today, and some gains to Indiabulls Housing Finance and the clutch of other NBFCs which have done rather well for themselves, the likes of HDFC and Bajaj Finance. But the broader of the spectrum, Devina, well, actually a fair bit of green compared to what the large caps have.
Well, it seems to be a slight bit of a reversal in the momentum like we've been seeing in the past few days. But again, very stock specific, and specific pockets actually garnering a lot of interest this afternoon, particularly the housing finance companies on the back of the relaxation of the securitization norms. You've got stocks like a Repco Home. We spoke to the management early in the morning that this might not really, they don't do too much of securitization of, the longer term loans that they have beyond 5 years. So for them, this might not be a big kicker, but the stock nonetheless is up about 7.5%. Group Finance and Divan Housing Finance are some of the other names that are doing well and are active in trade this afternoon. Amongst other movers in trade, you've got the likes of an Eros International that's gained some interesting ground. You've got Prestige Estates, United Spirits. Again, the stock is up and about and closer to about 6% higher. Prestige Estates is up 8%. United Spirits closer to 6%. Volume buzzers then. ITI Limited, that stock trades about 12 lakh shares, about 5% higher, but incrementally, if you have to see the percentage change in the volumes, way higher this time around. Page Industries, 5.5% higher, and that's a big move on an intraday basis for Page Industries. Hexaware from the mid-cap IT basket is doing okay, about 3.75% higher. A stock that is there closer to its 52-week high, Apollo Hospitals, 1,288 is its 52-week high, trading somewhere closer to that, just a few points away from that. I think it's 1,273 right now. But let's talk about what's been happening in the futures and options space. It's the first day of the December series. Agam Akhil, he's here with us to highlight, all the day's trading action and what is likely to come about. Agam, good afternoon.
Very quiet, Devina. Well, good afternoon. We certainly have seen one of the quieter beginnings of a series right now, considering the Nifty as well as the Sensex trading largely flattish. Open interest accumulation, very little as compared to what we are used to and what we have seen over the previous few months on the first day of a new series. Today, we see the Nifty see about 5% increase in open interest. Coming down to the Nifty banking futures too, as you can see on your screen, there's absolutely no change whatsoever in open interest. In fact, the Nifty banking index down by around a little less than 0.5%. The India volatility index is the surprising element here, because despite the fact that we ain't seeing too much happening, there is a gain of 5.5% for the India VIX, and it is once again inching towards the mark of 20. This, I reckon, is of course owing to the events that we are taking place for. But when it comes to your open interest scenario right now, we're seeing changes around the 10,700 mark. That's where we're seeing more writing around the put and a little bit of accumulation in the higher level 10,900 calls. But on the whole, as I've suggested, it's been quiet. That's your total open interest distribution. As we had seen over the previous few days, the range has shifted upwards. What's really interesting is the 11,000 mark out there, as you can see, and we're going to have to wait for a few days before we start seeing a good trend, because what's evident here is the 11,000 mark having the one with, well, as much open interest in puts as calls. Moving on to some of those stocks, we have Repco Home Finance, which is clearly the stock, at least in the futures and options space, that's seeing 65-66% increase in open interest towards longs. Oil India is the other one. This one is towards the short side, taking a near knock of around 6.5%. And finally, coming down to Bata India. That's also seeing substantial longs building in. But if you leave the three stocks aside, there are plenty of other stocks which are also seeing accumulation, but that's largely because of the fact that we are into new series.
All right, Agam, thanks very much for that. That's the first day of the new series on the F&O side. Well, let's talk about a specific company then. Haryana Renewable Energy Development Agency is working on a plan to roll out 50,000 solar agriculture pumps at a project cost of 1,696 crores with an aim to reduce the subsidy. How does this impact players in the water pumps and motor space? Let's get a management view from Akhilesh Maru. He is the Chief Financial Officer at Shakti Pumps. Mr. Maru, thanks very much for taking out the time and speaking with us. Just highlight for us how big an opportunity this is.
This is around 1,700 crore opportunity which they are planning to start. And like Haryana, there are many other states who are planning to come up with the big opportunities. And few of the states have already started. Like Chhattisgarh is already doing around 22 to 25,000 pumps. And Andhra is already planning for 25,000 pumps. Tamil Nadu already disclosed for 1 lakh pump. Maharashtra already announced for 1 lakh pump, and 25,000 they are planning to do it in this year itself. So there are a couple of big opportunities which is already announced. We are just waiting for till the time the execution started, whether in this year or part of the activity of the next year also.
All right. So have the bids been invited already?
Yeah. In Haryana, it's already started. In other states like Maharashtra, yet to come, they are still planning for the tender. Andhra, half of the tender for bids already started, and I think it's already fridge. And like Chhattisgarh, it was beginning of the year. MP, Rajasthan, it was beginning of the year. So few states already running the project, execution already at halfway. Few states yet to start, and few announcement also yet to come.
How confident are you of getting a share of these orders?
We are participating in most of the tenders, and generally in tenders there are 7, 8, 9, 10, 12 people, depend on the state to state and the terms and the business terms of the tender. As per we get some shares into that.
All right, got that, sir. Let's
yes,
talk.
I can hear you.
Yeah, no, okay. Just, addressing, the current here and now and what the coming few quarters will look like. I'm talking about Sans disorder. I mean, if you get it, if you come out as the lowest bidder, that's great. But without that, what is the progress of the business in terms of, getting in new order flows for Shakti Pumps? And if you could give us a slight bit of guidance in terms of what kind of revenues you'll likely clock in by the end of this year.
Yeah, the end of this year, we are planning to close by 20-25% growth in the top line. And something I have to tell you for the next year, this year actually we had expected Kusum Yojana, some of the project we were expecting under Kusum scheme, but we haven't got Kusum not yet started. Same way, International Solar announced Solar Association, ISA, which has also announced some of the project but not yet started, and finally last month they had given this responsibility to EESL to come up with a 5 lakh pumps project. Now we had another few export opportunities which we are expecting this year, and there are fair chances that we can start in this year export opportunities also. But eventually the major impact of all this scheme is going to come up in the next year. So what opportunities we were expecting this year had little postponed, major part of their execution postponed to next year, and only little part will be executed and maybe possible to execute in this year because it already 3 to 4 months left for the year ending.
So put it into numbers for us. If you have to remove that particular order, like you highlighted, it may probably take some more time. It's getting a bit pushed back. So what do you close the year with?
What number I said, 20 to 25% is without those schemes, because in the beginning of the year when we were talking about ISA, Kusum, there was nothing clear on the paper and the air was not very clear. So we have not counted anything out of that. We just on a regular basis business or the state-wise pump tendering basis, we have decided that we can achieve at least 20-25%.
Akhilesh, your last 5 years have shown that there are times when the margins go off as well from the 18-19% band that you have. 2016 in particular, when you had a slightly tough period both on the revenue and the operational front. How do you expect to end FY19 with on the margins front, and what's the anticipation for FY20?
The FY19 margin will be similar to the previous year, or half 50 basis point less than the previous year, might be because of the dollar impact, or might be because of the steel prices up and down. A very little impact on the margin in this year, but next year definitely we are going to improve, because next year, as I'm expecting couple of big orders and big good projects to become, because they are already announced and not yet started, so has to come in the year, has to come in the next year. So if all counting, if all consider the new projects, then utilization level is obviously going to increase, and this will lead into improvement in the margin.
What is the current utilization level, Akhilesh?
They are around 54%.
Oh, so I'm guessing you are not into any kind of capex need currently. You will probably reach 80-85% before you think of further capex.
Yeah, see, the thing is, for our existing product line, we don't need any capex, but we have enough scope for going for a backward integration and the forward integrations. Like last year, we were working on VFD, variable frequency drive, which is one of the component of our solar pump, integrated solar pump. And this year, in the year of this, in the month of July this year, we inaugurated a new plant for the VFD. The same way we are working on structure of the solar panels, on which you actually put the solar panels. So fabrication work we are also planning to start in-house. So little bit capex for backward integration and forward integration is always possibility there, but not much. So all put together, I think normal capex is normal maintenance capex. We have around 15 crore.
Okay. So capacity utilization inching up, margins staying at 18-19, growth of about 25%. What does that do to the bottom line? Your net income was 34 odd crores in FY18. What do you anticipate FY19 to be like?
In FY18, as I said, the margin effect for 18-19 would be a 50 basis point. So around 7.58% could be our
net margin.
Yeah.
Okay. Fair call. Akhilesh, we'll leave it at that. Many thanks for joining in today and giving us that perspective. Appreciate your time, and all the best with the order.
Thank you.
Shakti Pumps, talking about this possibility of Haryana putting in 50,000 solar pumps project, and what would happen if indeed some of these companies, and Shakti Pumps in particular, bags it. The volumes are a bit thin on this stock, but looking okay. Okay, amongst the host of global cues, I think what's taken center stage is the G20 summit. The group of 20 world leaders are scheduled to meet in Argentina for the next 2 days. Will there be an output cut from OPEC members? And that's a conversation that will dominate, yes. But I think the US and China striking or not striking a truce with regards to the trade war is probably the showstopper of the event. Let's discuss the expectations of the same with Zhou of Commerzbank joins us right now on the show. Good having you. Thanks much for taking the time out. Donald Trump, before leaving, kind of indicated the deal is not on the table. In the run-up to the event, he's spoken about there being a higher probability of the situation not worsening with China. What is it that Commerzbank is pricing in when it comes to this particular aspect, the meeting between Xi Jinping and Donald Trump?
Yes, I think, it's very clear that looks like both sides wants to have a deal this weekend. I think, this is the most likely case for us to see a very broad framework can be reached, which could pave ways for further talks. I think, this is the most likely scenario. And of course, we know that there could be some case that, that a deal can't be reached. And in this case, the market could be shocked, and we could see a continuous kind of market turbulence in the coming weeks. But of course, I think, most least likely is that, a trade deal can be a comprehensive trade deal can be reached. So for me, I think, our central scenario is still that, both sides can come up with a very broad and relatively high-level framework and open doors for further negotiations in the coming months or quarters. So basically, we believe that between China and the US, the trade tensions is continued to be there, and and also in general, I think the problem between China and the US is that the US try to contain China's rise. So in this case, I think if not trade tensions, something else could come up between China and the US, and this will be this kind of tension could be persisting for long.
Aside from trade, the trade tensions between the US and China, what else takes center stage at the G20 summit this time?
Well, I think, definitely the focus is Trump's policy, because I think in the past 2 years, he has blamed a lot of countries about their trade policies, as well as a lot of, practice that could have threatened the US interest. So in this case, I think for any countries at this moment, they also try to come up with a new framework with the US. So I think, WTO rule is under pressure, and so-called, multinism the framework also is under pressure. So basically, for China and other countries in the world, the thing is that how to come up with a new global order with the US under Mr. Trump's administration. Of course, the other thing is the Saudi Arabia's prince. He will be also presenting the G20 meeting. So I think that also something interesting to watch, especially after the journalist's death a few months ago. And also I think this also could have some impact onto the global oil prices.
There's also some talks about Saudi Arabia and their interest in an infrastructure fund with India. Is that something that you're hearing about?
Well, I have no idea about that. I think in general, the problem at this moment is that overall the U.S. need to reframe its Middle East policies. But on the other hand, oil prices is important for India, Indonesia, Philippines, these countries as well. So I think for both Middle East countries and those countries who need to import oil from the rest of the world, the most important thing is that the best interest is to have relatively stable oil prices going forward.
What are you making out of, the dollar movement specific to, post the announcements of the Fed chairman and, the dovish undertone and the possibility of the rate hikes not happening at the earlier envisaged pace, and what that's doing to the currency, because we're seeing strength once again coming back into the Indian rupee?
Yes, I think for India rupee, the problem, the theme is the falling oil prices. I think that is the catalyst for India rupee's strength in recent months. Basically for dollar, the story is about the Fed rate hike process in the coming year. I think after Powell's speech this week, generally the market has gradually toned down the expectations over the rate hike process in the coming year. So basically, I think in general, we also revised down our Fed rate hike process for next year. We lowered it to 2 times instead of 3 times. So I think this is generally has brought in some kind of dollar weakness on a broader base. But on the other hand, we know that the China economy is slowing, European economy is slowing, and also Japanese economy is not doing well as well. So on the other hand, the dollar strength, dollar stories also depend on the global economy. If global economy is not doing well, even though the Fed could slow down the rate hike process, that does not naturally means that the dollar will be under pressure to weaken. So I mean, if there is a significant deceleration of global economic growth, dollar could be also become another safe haven. So I mean, dollar strength could be also there. So in general, I think in the foreseeable future, the dollar story will still largely dependent on the Fed policies, which could be dollar negative. But from long-term, medium-term perspective, the most important thing is that if US still grow relatively robustly, but other economy can't do well, I think the money will come back to the US dollar again. So I think it's very, very tricky moment if we look at the dollar forecast from now on.
Just to one last question, before we let you go, with regards to whether or not the emerging market basket once again has started looking attractive from a foreign investor perspective. While India has once again started to make its move up high, you've got the likes of Hong Kong's Hang Seng also picking up from the lows, once again trying to make its way back to the top. What's the sense now? Are investors getting a little bit more comfortable with the idea of investing back into emerging markets?
I think in general, what happened over the past few months is that there's an EM rally. So basically, we know that despite the US dollar is relatively strong because of the euro and the sterling weakness, actually EM currency is doing quite well, especially if you look at Turkey, India, and Indonesia in the past few months. So basically, we can see that maybe the sell-off in a few emerging currencies has been relatively come to a pause. I think going forward, it's very interesting to see if India, Indonesia can still grow relatively fast. I believe that the foreign investors will come back to these markets. And if you look at India's bond yields, actually it's still very attractive. If the currency can be stable and the bond yields actually at around like 7.7% for 10 years, it's actually a not bad deal to enter the India government bond market at this moment.
Okay, Hao, we'll leave it at that. Thank you so much for taking the time out and being with us. Appreciate your time.
Thank you.
All right. Let's get in Sumit Sarkar now on the chart of the day segment. Crude's been on a seesaw ride through 2018, cooling off significantly from its year's highs at the start of 2018. This drop has led to one of the sharpest corrections in a decade, right, Sumit?
Well, yes, if you see Brent crude now, that has slipped nearly 20% so far in the month of November 2018, marking its biggest monthly decline since the financial crisis. Now, the Asian benchmark of oil, now that slipped below $60 per barrel in the month of November on the back of higher output and because of US decision to exempt big buyers of Iranian oil from the sanction. Now, it was in the month of October 2008 when crude had slipped nearly 33.5%, that is marking its biggest monthly decline in the last 10 years, and in October 2008 when it slipped 33.5%, and now in the month of November 2018 it has slipped nearly 21% in the month of November 2018.
All right, Sumit, thanks for putting that into perspective. Well, that's probably one reason why the Indian markets and some of the other world markets have got some wings as well. But I believe despite this rise, certain quarter of the market believe the market is not too overvalued. In fact, not overvalued is something that Prashant Jain of HDFC AMC told us as well. He spoke to me on a special series, Navigating Through Uncertainty, and said that he believed at least that it was futile to predict markets over the short to medium term while they remain long-term value creators. Listen into a small slice of that conversation.
India is a secularly growing economy, and while we time and again are faced with changing headlines, both local and outside India, the fact is that most of these changing headlines have little or no impact on the underlying economy. The economy is growing because of certain very long-term demographic factors, certain factors which have to do with the competitiveness of the country, etc. So India's nominal GDP growth in rupee terms, the growth in rupee terms has been remarkably constant between 12 to 16% across different environments. When it comes to equities, over long periods they are simply tracking the nominal GDP growth. But over short to medium periods, unlike economy, the stock markets are driven by sentiment. Not so much by economic changes or even by profit changes. Profit changes certainly impact, but sentiment changes even faster. And it is extremely hard to forecast sentiment. Extremely hard. I mean, look at oil. Few weeks back, the sentiment was different. Today it is different. Iran sanctions, everyone was worried, and suddenly it changed overnight. But this is the reality. So stock markets over short to medium periods are extremely hard to forecast. People do have a view, many of us, but I have seen there is hardly any sanctity to these views. On the other hand, if you just focus on how are stocks valued, how are stock markets valued, are they overvalued, are they undervalued at a general level, then you are able to take a fairly decent guess or view on the markets over the next 3 to 5 years. And if you look at the markets today, while P's appear to be a bit elevated, and that is what most people are focusing on, but market cap to GDP in India is close to all-time lows. Now the divergence is because the underlying corporate profitability in India is passing through a very bad patch. And last few years, large corporate banks, certain other sectors are running much below, are experiencing much lower than normal profitability. So in such a situation, even at low price to books, even at low market cap to GDP, the P's appear to be elevated. So I think there is good value in these markets. India is recovering very nicely. The macroeconomy is doing well, and markets are not overvalued. So I am optimistic for the markets with a medium to long term view. But short term is always extremely hard, and I think it is actually futile to try and guess markets over the short to medium term.
Yeah, no, okay. So let me rephrase my question. I'm not trying to, I'm not requesting you to second guess what the markets will do in the next 6 odd months. But would you believe that this period of uncertainty could bring heightened volatility as well, and therefore, let's say for an investor who's got the ability to commit part money and not full money, it might be prudent to bide the time, stagger the purchases as opposed to do everything right now when, well, selectively valuations might appear to be reasonable.
See, the future is always uncertain.
Okay.
It is always the case. Will foreigners buy tomorrow or they will sell tomorrow? I don't know, and no one knows. The fact of the matter is, current year we have seen one of the highest selling by FIIs, both in fixed income and in equity markets. And the markets have held up very well despite that. Someone may talk about oil, but you know it's very hard to forecast oil prices, right? Someone may talk about elections. Data suggests that every single election year, right from 1979 onwards, the markets have delivered positive returns in any fiscal year where elections were there. So elections are a known event. Markets position themselves appropriately and most often conservatively ahead of the elections. When election results are out, even if they are contrary to your expectation or market's liking, you realize very soon that the linkage between elections and corporate profits is a very weak one, at least in the near term. So you again go back to the next quarter profits, how are the profits and how was the evaluation. So these are events which cause uncertainty in the minds of the investors, but I feel that either these are random events or these are events to which we don't have a clear view how it will impact the markets. Now coming to your second question, how should investors invest position? I think there the answer is very clear. See, equities are a very simple asset class. Short term they are volatile. You could be up 10-20%, you could be down 10-20%. But over long periods they are growing in the Indian context around 15% per annum, which is roughly the same as the nominal GDP growth. Sensex was 100 in 1979. Today it is 36,000. It is up 360 times in nearly 40 years. If you work back, it is nothing but 16% CAGR. So I think in equities the key is to figure out for each one of us what is that portion of our wealth which we don't need for the next 3, 5 or longer years. And what is that portion of our wealth on which we can tolerate volatility, both emotionally and financially. And we should invest that portion in equities. Of course, if you want to reduce near-term volatility, it is always a good idea to invest or spread out your investments over a few months or years.
That's Prashant Jain's interaction. You can actually read the whole interview or even watch the whole interview on our website, bloombergquint.com. Do log on and the homepage has Prashant Jain's interaction and the transcript of the interaction as well. So do log on to bloombergquint.com for more on this story and the whole interview, of course. Okay, let's talk about the here and now. While the markets are a bit subdued in today's session, Manav Chopra of Indiabulls Ventures joins in with his thoughts on the charts. In a bit, Hadrien Mendonca would be joining in as well. Manav, good having you. Good afternoon. Thanks so much for joining in. 4 straight days of gains, and yesterday was a blockbuster move. Is this a pause before the resumption of the rally, or would you believe that the markets are a bit overstretched and it's maybe time to take some money off the table?
The kind of move that we've seen from its recent lows from October, we've already seen a good rally of, say, sub 900 points. Definitely after such a move, we've not seen any sharp correction. It has been a very brief pause a few weeks back, and from there on we've seen a move, and maybe this could be a pause. Important things, Neeraj, one needs to keep a note of is that, as far as there are brief pause, it clearly indicates that we could see some furthermore legs on the upside. I see that happening going forward. On the lower side, I think 10,650, 10,700 would be the immediate support, and as long as we are holding to those support levels, we maintain our upside target of close to 11,250. And we did had a very good interaction in the month of October, where at sub 10,000 levels we did came out very aggressively and targeting for Nifty at sub 11,000 levels, and for Bank Nifty around 24,000 levels we did initiate a buy for an upside of 26,500. So keeping all this picture in place, the cycles have panned out quite well, and I think this market could see a short-term consolidation, but eventually that should not pause anybody for initiating fresh longs. Those who had bought at lower levels, it's definitely one should look to book profits at high levels, but eventually I sense that this leg of an upside would continue. 11,250 would be the immediate targets for the Nifty, and for the Bank Nifty 27,000. Once if it breaches on the immediate basis, I think 27,500 and above could be the levels to look out for.
Okay, interesting. So if this is the positioning, Manav, what are the stock specific trading ideas for this afternoon?
Yes, I have two stock picks. My first buy call is on ITC. Basically, the stock has been continuously been forming a series of higher base on the weekly charts, and it has also taken support at its rising trend line. If you look at closely, there has been good volume built up on the short term perspective, which is initiating that there are some short term accumulation which has taken place and indicates important key support levels, which is unlikely to be breached on the lower side. I sense we could see a surprise move in ITC going forward, and from the FMCG space, this could be one of the stock one should not miss on. It has a very good risk reward ratio even at the current levels. I expect the stock to even take out its peak of 320 eventually. So we are targeting for an upside of 320 on the immediate basis. Stop loss of 270 can be placed. My second call would be a buy on Apollo Hospitals. The stock has been completely on a momentum base, and has also witnessed a good breakout on the daily charts today with above average volumes. Looking at this momentum, I sense the stock has also witnessed a good breakout on the weekly and the monthly perspective. So keeping that place in mind, I think one can initiate a buy with a stop of 1240 on the lower side and expect this move to continue. Upside target would be at 1330.
Okay. All right. Those are some of Manav's picks. Hadrien Mendonca also is joining in right now with his views on the market. Hadrien, good afternoon to you. Let's take a look at the index itself first off. A good day of trade for the Bank Nifty yesterday, and so for the Nifty. 10,860 now. What do you do with the Nifty and also the Bank Nifty around the 27,000 mark?
Yeah, good afternoon. So definitely we have seen a very good run. This week has been pretty strong. The Nifty not only surpasses 200 DMA but also held about it pretty convincingly. But one important factor that we have noticed that has been developing is that if you look at the correction, right from the all-time highs to the recent lows of 10,000, I think we have the Nifty has already retraced 50% of the correction that we went through. So I think that's a very, very important retracement area for the markets, and I think this indicates that some kind of profit booking or some kind of consolidation from here on cannot be ruled out. So I think going forward we could see a little bit of sideways move or a narrow band kind of a trading range for the Nifty, just before the next leg of bullish up move begins. So in my opinion, if anybody is holding long positions currently, one should definitely take some money off the table. The overall trend does not change. The stance continues to remain buy on decline. So the decline that I'm expecting in terms of because of the profit booking should be a good opportunity where one can again re-enter the Nifty and play the longs once again.
Okay, got that. What about some stock ideas then? Cipla and Kotak Bank.
Yes, we've wanted to stick to the heavyweights. That's where a lot of buying attention is there. So I think mid caps and small caps are still finding it difficult to play a catch up around, which means that we should continue to stick to the large caps. So yeah, Cipla, many of these pharma stocks are like a Cipla or a Biocon are making the rounds of positive momentum currently, and Cipla, more interestingly, if you see the monthly charts, has found very strong support at its rising trendline support area. That's something very important. It's not breaching it. I think one can really bottom fish Cipla at these levels for a short-term target of 560 when we are placing stop loss at 525.5. The second stock is Kotak Bank. It was a giant that was asleep for quite a long time now. It's been like almost a month where we saw markets outperform, but Kotak Bank was just stuck in a narrow band. Finally, Kotak Bank is, coming off with flying colors, and it has also breached its 200-day moving average, which is a very important positive sign and a good development. So I think one should not miss out on a Kotak Bank. We are expecting a target of 1260 and placing a stop loss at 1215 on the downside.
Got that. Anand, Tandon, market expert, is also joining us on the show right now. Anand, what are you making out of the current market moves? We're back, closing in on those 11,000 levels on the Nifty. The broader market, however, seems to be missing out on the action a bit. It's mainly the few of those large cap names propelling the index higher. Bank Nifty is also doing okay, but not so much so for the mid caps and small caps.
Well, that's right. That also tells you that therefore the strength is perhaps not as much as it was the last time it reached these kind of levels. During that period, of course, we've had a somewhat worsening macro, which is getting repaired again. But definitely a much worse expectation in terms of earnings growth. And we are back to, perhaps single-digit or marginally double-digit earnings growth expectations all over again for the nth time. So I think, again, the same argument will continue that, there is only that much that you can push in terms of the frontline companies. I would expect that the market will slightly broaden from here as the frontline takes some time off and lets the smaller companies rise, and after which, again, you should perhaps see a move down.
Okay, got that. Stay on with us, Anand. We'll come back to you in just a few moments. Let's go across now to Sharad, who is standing by to highlight 3 of those buzzing stocks that he gets for us every day. Sharad, good afternoon.
Good afternoon, Devina. The first stock I've picked up is Zuari Agrochemicals, which went up as high as almost 3% today, which was almost highest in the 4 trading sessions. This is based on the news that it has resumed its ammonia and urea plant operations at Goa plant. So basically the operations of this plant were shut down on October 19th. However, they also plan to start the urea production from the start of December 6th. Apart from this, the second stock which I picked up is NTPC, which is down by almost 3%. It's lowest in almost 30 odd months, based on the news that the Financial Ministry official says that the government is looking to raise around 4,000 crores by selling around 3.25% stake in the company via offer of sale in December. Earlier, the government had actually planned to sell around 10% stake in this, and throughout this year, they have sold around 6.75% odd stake. The third stock which I have picked up is Oil India, which has also gone down by almost 6.5% today. It's lowest in almost 2 months. Fitch Ratings says that the planned share buyback will likely increase the company's net leverage. So basically the net debt adjusted EBITDA will be expected to be around 2.5 times in the financial year 20 by the rating agency, as compared to around 1.4 times in FY18. So basically the share buyback was almost around 4.45% of the share capital, which aggregated to around 1,000 odd crore rupees. Back to you.
All right, Sharad, thanks very much for that. Those are a few buzzing stocks that Sharad has picked up in the markets this afternoon. Anand, is there anything in particular that you have been tracking of late in this recent run-up that we've seen on the markets that has shown potential of further upside now?
I think you have to look at the longer-term picture, and as I have been maintaining, I don't think that much has changed as far as sector allocation is concerned. I would expect to see consumer discretionary being somewhat muted, given what we have seen in NBFCs. I think the domestic consumption story is also very fully priced. Therefore, you are essentially restricted looking at 2 sectors, either those which are exporting or in the domestic market, the corporate-facing banks, because of the repair that one is expecting from the balance sheet. And that, I think, are the 2 sectors that, or the 2 areas that will largely make up most of the portfolio.
Anand, what's your thought on the likely winners between the 2? I know you don't have, people don't have to choose one over the other, but when we look at the private sector banks, over the course of the next 12 to 18 months, would you believe that the retail focused ones, which have been winners thus far, which is HDFC, Kotak and IndusInd predominantly, would continue to score more over the ICICI Axis banks, or would you believe the latter can come to the fore? I'm not including Yes out here because that has got some company-specific issues right now which are yet to be resolved.
Well, if you're looking at the delta in terms of stock market performance, I think you are likely to see the corporate-facing banks doing better. At least if the expectations that the analysts have that the NPA problems are going to get resolved or have been resolved largely, and therefore from here on you should see more normalized profit growth coming in from the corporate banks. And there is still a little while before they build up the next set of NPAs. So the argument I would be making is that in terms of the earnings growth, clearly the corporate-facing banks will show a much higher growth, and consequently, given where they are valued at, possibly a much higher stock price as well. That doesn't take away from the fact that companies like HDFC and Kotak have got excellent franchises and have very good track record in terms of execution. And therefore, from a core portfolio point of view, there is no way that you should be getting out of those. So if you're looking for incremental investments, I would think corporate banks roughly. Otherwise, of course, if you are looking at the next 10 years, I think the HDFCs and Kotaks of the world is where you need to be.
Is Yes Bank, a complete no-no zone for you?
Well, at this stage, I would think that, given what I just said, if you can get a State Bank of India at, let's say, 1.4 times book value and a Yes Bank at, let's say, 1.2 times book value, the margin of safety, to my mind, is better in terms of State Bank because you're not likely to get any, you are less likely to get any nasty surprises going forward. That doesn't mean that Yes Bank should not be looked at for people who have got a much higher threshold in terms of risk-taking. Perhaps there will be something that you could be buying and looking at 1 year down the road as a multi-bagger.
Interesting. By the way, stocks which are doing rather well for themselves in the last few minutes of trade include a Stride Sashun. It's had a sharp spike up. Just bring that up up about 8%, 5.5% in the last few minutes, but a remarkable move in Stride Sashun. Bombay Burma has had some gains again in the last 15-20 minutes of trade, so good going there. And from amongst the large cap names, Cipla has inched up and is now trading near the high point of the day. So some sharp spikes into each of these. Hadrien, you want to come in on, let's say, a Stride Sashun? Hadrien, a Stride Sashun?
Now, was that for me?
Yes, Hadrien.
Yeah. Stride Sashun, definitely the move is pretty impressive that we've seen today. But that's pretty in line with all the other pharma stocks. Pretty specific stocks are doing the rounds of positive momentum. I think Stride still has a lot of room on the upside. It has a potential to move towards the 520-525 zone, which is the long-term 200-day moving average. That is where the first resistance for Stride should come. Secondly, we have also seen a classic cup and handle pattern breakout on a Strides, which is a very positive development with good volumes. So I think anybody who's wanting to do a delivery-based buy also would be a good opportunity at these levels.
Certainly looking strong is Pharma selectively, Reddy, Cipla, etc. All of them have done really well. Anand, is it very bottom up right now on pharma, or do you reckon that that corrective move that we've seen post the up move at the start of the year means that the sector at large has some tailwinds, at least valuation wise, which could maybe lead a lot of them, if not all, higher over the course of the next 6 months?
Well, for the current year, I don't think that there is too much left on the table in terms of valuations. But if you are looking at 2 years out, I think pharma will likely to continue to perform well. And I'm not so sure whether every company should be something that you are looking at. But some of the frontline companies are definitely looking quite attractive even now, which includes companies like Aurobindo and Dr. Reddy's, for example.
That's some of the pharma names thereof. Is real estate something that you're closely watching? Because it looks like, for some participants, the bigger names and the stronger names within this space that likely have that kind of cash to ride through this entire period of uncertainty are the ones that will come out to be winners in the end, and therefore investments in them probably make sense. I'm talking about the likes of Oberoi Realty, Godrej Properties and the likes.
So in my view, I think the brand is what is most important, because going forward, I think land and money are both dependent on what is the brand and how easily you can sell it. Real estate so far has been something which has been a seller's market largely. Almost none of the smaller builders bother about trying to do either a market survey or an attempt to do any marketing. I think that's going to change. That has already probably changed for some time now, but it's going to change even more dramatically from here on. And therefore, companies which have not just execution capability, but basically branding capability are the ones that you need to be looking at, if at all. That said, I don't think there is any great hurry. Most of the markets are oversupplied, and at least in the metro cities, they are not, except for the commercial real estate. I don't think there is much happening anywhere else. And even in the commercial real estate, we're essentially looking at companies which are putting out stuff on lease, and therefore it's not really equity returns that you should be looking at, but lease income returns or debt market or debt plus kind of returns.
Fair call. Anand, we'll leave it at that. Thanks so much for taking the time out and being with us today, and have a great weekend.
Thank you. You too.
That's Anand Tandon. And by the way, speaking of real estate, the reason why we asked the question as well is because the Nifty Realty is amongst the top performing indices in the session today. Real estate and pharma are essentially the two sectors that are doing very well for themselves in the session today. Anyways, to a corporate voice, lower crude prices, cheaper pet coke are all good news for cement makers in the country. But what's not as encouraging is the flattish prices, with manufacturers failing to gain back any meaningful pricing power. Will this change anytime soon? I spoke to Bina, engineer of Sanghi Cement, and began by asking her about her views on the recent price hikes in the cement space.
It's a very small marginal hike in the price, which I would consider more as a routine. And it is expected during this season, when the volume improves, there is some possibility of price hike for the cement players. Also, as you pointed out, the cost hikes could not have been passed off to the consumer during last quarter. So marginal impact of that also is on the price.
So in the recent NBFC turmoil and the general tight liquidity situations, have you been adequately funded? I know you're tied up your funding, but has funding been adequate for you to continue your expansion plans as previously planned? Would you be on track with the entire expansion process?
Absolutely. There is no impact of this liquidity crisis on our expansion plan. We have all committed about 40% funds into the project. So I would say we have invested around 40% into various letters of credit and advance payments, etc., to the suppliers, and we are very much on track.
Okay. Have finance costs gone up, Ms. Engineer?
Marginally, yes, because MCLR across the entire finance scenario has gone up, so at least 25 to 50 bips point is the increment everyone has seen, and these are all tied on MCLR basis, so there has been a small impact of that.
Okay. Now, I just want to dwell a little bit on costs, Ms. Engineer. For Sanghi in particular, and if Q1 and Q2 in particular are an indication, costs are proving to be a bit of a headache. You have the lowest raw material cost per ton, but freight and power and fuel are just looking abnormally high. I mean, our calculations seem to suggest that that's been the big bugbear for you. How does the situation shape up over the course of the next couple of quarters, but more importantly over the long term? You are regarded as the company with the best limestone reserves and therefore the lowest cost, but it is to no avail if indeed the other costs are pooping the party so badly.
You are right that last 2 quarters power, fuel and the freight costs have been significantly on the higher side. Fortunately, the worst is over. We had 2-3 issues during last 2 quarters. One of them was obviously the diesel price hike, which has softened during last about say 1 month and softened significantly. Besides the fact that new axle load policy has been now implemented, and that is allowing us to carry higher load per truck, and therefore the freight cost is likely to soften during the second half of the year. So that addresses the freight issue, which had gone through the roof during last half year. That should soften significantly. Second is the power fuel. So we have been major user of lignite, and we were using 3/4 of lignite as our fuel mix, both for the power plant as well as for the kiln. During last 6 months, that changed significantly to say just about 10 to 15% lignite availability. On the other hand, the coal cost had gone up very high in international markets, coupled with the rupee depreciation. Now, if you see during last about 1 month, all of these factors have corrected. Coal prices have come down by about 8 to 10%. Rupee has strengthened by, let's say, at least about 5 to 6%. And the lignite availability has improved from what we were using to say from 15% to at least around 30-35%. So all these three factors have corrected in our favor during last about 1.5 months. So I am looking forward to a better power, fuel and freight numbers during this quarter. Having said that, despite all of these, we continue to remain the cost leader in the industry even during the last quarter.
On the raw material cost, I agree, but otherwise our calculations seem to suggest that you slipped the ranks a little bit. Please correct me if I'm wrong there. And part 2 of my question therefore would be based on the answer that you just gave me. As a calculation, I think freight and power and fuel accounted for about 78% of your total costs. Does that change materially in quarter 3, quarter 4?
It would. It would, because of the factors which I just described. It had eaten up into our margins during first half, which would now get released, and we should improve on that during the second half.
So about from 22.5% which were reasonably good EBITDA margins, to about 13.5% that you fell to in quarter 2, give or take a few percentage points here and then depending on what you include and what you don't. You reckon a 300-400 basis points improvement or maybe even more is a distinct possibility?
Yes, during the period from now to March, yes. Maybe this quarter will not reflect as much because all of these changes are happening as we speak, and therefore the whole of this quarter may not reflect all these advantages. But clearly by end of March, we should have all these advantages in place.
Okay, Ms. Engineer, just a slightly long-term question. When you announce your expansion plans and your intend to move into the Mumbai region, etc., and the coastal shipping, I think that's what got a few people a bit excited and a bit concerned. Because companies owning large assets, ships, etc., for example, is not maybe the most ideal cost scenario. But in your case, it would help you because you would transform your cost, your freight cost materially as a result of this use. What's the long-term proportion of freight costs that you envisage for you as a company? I'm just trying to get a sense of whether Sanghi becomes a material cost leader on the production side, and by production I mean not just the raw material cost but freight and fuel and costs as well, over the next 3 or 4 years, because you have the raw material cost advantage. What happens to the other factors over the long term?
See, you are right that we are an asset heavy company because we have taken all the assets in this balance sheet and we don't have any subsidiaries or associate and related companies in which we hold the asset and we bill out to this company. And therefore, whatever the advantage of that ownership model versus a rental model is to accrue, that accrues directly to this company, which actually is a positive for the stakeholders. Second thing is that while the shipping has a positive impact on the freight, more importantly it opens the new geography for us and it gives us a larger and wider market of Mumbai and the surrounding regions, which was very critical for our growth. And therefore the move into the coastal shipping, we expect that over a period of time at least around 20 to 25% of our material would be shipped out, and which will have the positive impact on the freight cost. As I mentioned, lignite or imported coal, the scenario is now stabilizing. The freight and the crude oil scenario are also stabilizing. So I do see that Sanghi will continue to maintain the cost leadership that we have enjoyed during last couple of years also, and in coming 3 to 4 years.
Okay, my final question, Ms. Engineer, and that would be a 3-year timeline or a 4-year timeline. When you have all your capacities running on stream, you probably have your shipping routes sorted and 25% of your material moving through ships, and therefore that cost advantage coming in as well. what happens to the debt picture? That is one concern, right? You are indebted. Maybe you had to take it because you had these expansion plans. Promoter holding is pledged quite significantly. The last I heard was 97%. It may have changed a little bit here and there. How does all of that shape up over the medium term?
First, let me address the promoter pledge. This was asked to me by various analysts also. So I need to clarify that the promoter holding is not pledged to 97%, but promoters have given non-divestment undertaking that they will not dilute below 51% shareholding in the company. And that kind of undertaking is now considered as an encumberment as per the new SEBI guideline, and accordingly we have to make those disclosures to stock exchanges and etc. Therefore, it appears to have been encumbered, but it is not a pledge, it is non-divestment, which is again a positive for the company and the rest of the stakeholders, that promoters are undertaking not to divest below 51% during this project period and beyond. So that's the clarification. It's not 97%. One can access our shareholding pattern, and the notes are given in the shareholding pattern disclosed on the stock exchange websites.
The other one was
that
debt.
Answers your second question. And
the debt, yeah, the first question was about debt.
Was on the debt, and there, correct. So the we are not into major repayment of debt till this project is completed. That is till about March 20. After March 20, once the project is commissioned, we will have far enhanced cash flows, and till then we are conserving the cash. After that, our repayments will continue, and we have a very long date. We have almost time for total of about another 9 years after 20. So we have repayment schedules stretching up to 2029. So therefore, I don't see any significant pressure on the cash flows with respect to the debt. At any given point in time, my debt equity ratio will not exceed 1. So that also we have ensured that we are in the fairly strong balance sheet mode.
भाइयों बहनों, केंद्र सरकार राज्य सरकार मिलकर के काम कर रहे हैं।
किसान है हिंदुस्तान का, उसको सही एमएसपी मिलेगी। मुझे बताइए, सही दाम मिल रहा है आपको?
मैं पूछना चाहता हूं, क्यों चुनाव आगे कराया?
My relationship with Mizoram is a family relationship. It's a relationship of love.
अभी तो सपने और बड़े हैं, मंजिल काफी ऊंची रखी हुई है। वहां तक हम सबको पहुंचना है।
Back to the markets then for the Nifty. We've got us back into the green now, 10,867 after that brief dip in the red. The bank Nifty though still under some amount of pressure, 0.25% given up, 26,871 on the bank Nifty. A quick look across Europe to see how the European markets are trading at this point. So it's and not so good from the European quarters. You've got FTSE 100 down about 0.7%, 0.5% given up for the CAC, and the DAX as well losing the same. Turnover then, you wouldn't expect it to be too high. It's the first day of the new series. On the F&O side, it's just about nudging close to 4 lakh odd crores. Half an hour left to go, so maybe around closer to 5 lakh odd is what you'll see. NSE cash also 28,000. Actually, that's pretty decent for this time for NSE cash. And BSE cash is surprisingly picked up, because on a regular basis you would see a turnover by close somewhere around 3,000. It's already crossed that, around 3,800 now on the BSE cash in terms of the turnover. The advanced decline ratio, that's the last variable to watch out for. So as we see now, still in favor of the advances, but not to that great an extent. Just about the ratio tilts in favor of the other advances, just slightly. Well, that's the market mood so far. Let's bring in Yash Upadhyay right now with his list of the Fab 4 stocks of the day. Yash, good afternoon.
Good afternoon, Devina. I'll start with the housing finance companies which are in focus today. So something like a DHFL that is up in trade close to 6.5 or 7% today after the central bank relaxed the norms for minimum holding period on the loan portfolios of NBFCs from 12 months earlier to 6 months or 2 quarterly installments. Asian Oilfields extends its run on the upside. It's locked in an upper circuit of 5% after the company received an order of 28 crore rupees from ONGC. MCX is in focus as well, up 4% today after Eastbridge Capital bought in close to 4 lakh shares or 0.8% stake in the company. And I want to highlight Page Industries over here, up 7%. Now it has snapped its 5-day losing streak, and this is the highest intraday move in over 4 months, with this volumes too coming in significantly higher. So watch out for Page. Back to you.
All right, thanks a lot for that. Those are some of the names making their big moves today. A few other names to talk about, and Edelweiss does okay, 2% higher. Future Retailers now up almost 4%. Remember, we were talking about how Amazon is looking to pick up that 9.5% stake in the company. 523 on Future Retail. Let's bring in Deepak Shenoy of Capitalmind. He's joining us on the show right now. Deepak, thanks very much for taking out the time. I'm going to start off with a quick view on the index, and then we move on to individual stocks.
So, Devina, the index itself is kind of, it's come back quite a bit. It's about 8% up from the lows. However, the index, is one thing, but a lot of the smaller and mid-cap stocks have been beaten up substantially more. They're starting to recover as well. So, there is a very positive attitude about the economy, at least from the macro data. And this is not speaking of GDP or something like that, but just looking at credit growth, credit demand, inflation, crude oil prices, FIs coming back in, the rupee stabilizing below 70 or coming to below 70. All of these are actually good macro factors, leads into some of the international developments like China. The competition from China probably slowing down because of their continued focus on pollution and reducing some of the very cheap competition that Indian companies had in the export markets, plus the 25% tax that the US is likely to levy on them from January. So that, all of this adds up to very good macro tailwinds, and I feel, maybe the index itself is perhaps a little overvalued as a Nifty, but a lot of stocks have fallen to substantially lower levels than they were from their highs, 20-25% lower, and they're looking a lot more attractive to us, specifically auto or some of the consumer durable sectors and perhaps the industrials as well.
All right. We have a lot of viewers also, asking us their queries, and we'll pose them to Deepak in just a few moments. But Deepak, one interesting bit, that you've put out is on Emphasis, and the likelihood of the company having to announce buybacks right up until 2022. Which means another 3 buybacks to the already 2 buybacks that they've announced. Break it down for us, and why do why have you come up with this hypothesis that there will be a possibility of future buybacks every year from Emphasis?
Okay, Emphasis from HP paid about 1.1 billion.
Repatch this. We just need to reconnect with Deepak Shenoy because this line has just gone a bit awry. but we'll try and do that in just moments from now. It's just that line shaken up. Anyways, we'll get back to that in just moments from now. While we wait for that, a quick question or two to both our experts, Manav, Chopra, as well as Hadrien, Mendonca. Manav, we're talking about how pharma has had a really good run in the session today. Cipla up 3.5, Dr. Reddy's up 2.5. We just spoke about Strides are shown a wide back. If you had to place a bet on one pharma name for a trade afresh at the current point of time, which one would that be?
Dr. Reddy looks very well placed. You know, the stock after a good sideways consolidation has seen a good breakout today, and you know, the volumes are definitely supporting. In fact, if you look at its long-term scale also, you know, the prices are out of its long-term downtrending action, and after a good sideways consolidation, a breakout is clearly indicating that, you know, the prices are getting into a new fresh zone. There is still a good risk reward ratio. I sense, you know, on the lower side 2650 is an important support, and that could also be a stop loss, but eventually I think the stock in a medium term to long term could see levels of 3100 and even towards 3300 levels.
Okay, let's start addressing some of those queries then. And Hadrien, I'll come to you with you know, a Bajaj Finance and an L&T Finance if you track it.
Yeah, so Bajaj Finance, you know, without a doubt has broken out from that consolidation base that it was been building in the past 2.5 weeks now. Secondly, short-term moving averages have been, you know, surpassed pretty comfortably. Thirdly, on the weekly charts, we are seeing consolidation breakout over there as well. So I think, you know, apart from the little profit booking that I'm expecting in a Bajaj Finance, I think the overall trend continues to, you know, still remain pretty strong. I think the volume participation is, you know, very interesting here in this week. If you compare with the past 2 to 3 weeks, it has surpassed the average volumes as well. So I think all these parameters are actually indicating that decline should be a good opportunity to buy. Bajaj Finance definitely should be a good delivery-based bet from here on.
Gautam Chopra has also asked about Max Financial. You know, Hadrien, this stock, obviously an interesting play now considering the last few days movement on the stock at 450 now. What would you do with this one?
Yeah, absolutely. It is pretty interesting. If you look at the larger picture and the monthly charts, I think it is on the cusp of creating a double bottom kind of a formation, which a lot of stocks, you know, in this past week have been forming. So I think this is one of those stocks where a double formation is actually visible. The only hurdle is the 460 levels that I'm really hoping that Max Financial surpasses, because that's the long-term 200-day moving average, which will actually decide the trend going forward. So above 460, one should, you know, be long on a with an aggressive mode. I think post that breakout, we are expecting 480 to 490 in the coming, you know, week or so.
Okay, got that. That's Max Financial. Few of those queries, you know, we'll keep taking them with our experts. But just going back to Deepak, he's back with us, and we were on the topic of emphasis and, you know, what's the value there now for an investment in emphasis and the potential of future buybacks, at least on a year-on-year basis till 2022. Deepak has done, you know, some bit of an analysis on this, and Deepak, why don't you run us through your rationale?
Yes, Devina, so I think the transaction goes into two levels. First, you think of 2016 when, you know, Blackstone bought Emphasis from HP. It did two things. It first financed half of that purchase, about $500 million worth, with a series of bonds that it placed to investors in dollar terms. They have to pay 5.5% per year on those bonds. Now, the specific condition on those bonds are that the cash flows only from Emphasis itself would service those bonds. So Blackstone's not going to have to use or will not use any cash flows from other projects or other investments to finance these bonds. In that process, what had happened was it also took out a second thing, which was a contract from HP, which is going to be for about 11 years, 5 years in the beginning for about $990 million. Then 2 years for 3 times after that, that's a negotiable number. So they're going to get $990 million in revenue from HP itself. That does make HP one of their largest customers, but at least it's guaranteed revenue, if you may. This will effectively provide emphasis with consecutive revenue. They will have that much is almost ensured. They're generating about 1,000 crores of free cash every year. And despite all their investments and all that, that's about the amount that they're able to generate. And now they have paid out about 1,000 crores in the last 2 years in buybacks and dividends. And therefore, because these bond has to be actually paid out, and $500 million is about 3,500 crores, on which interest at 5.5% is 200 crores a year. Emphasis, 50% of it is now owned, about 52% of it is owned by Blackstone. They will want to keep that. They won't want to sell many more of those shares because Blackstone is not going to be the eventual owner. Eventually, they want to sell emphasis to somebody else, and that somebody else will want a majority. So Blackstone is going to have to retain at least 50%. They had 60% in the beginning. They sold 8% for about 1,500 crores. Again, earlier this year, I think in March or April. And then, so they're going to service these bonds. We're looking at the IRR that they would generate and the way that the bonds would be paid off. There is likelihood of substantial payments coming out of emphasis. Dividends are actually an inefficient way to pay out because not only do you pay 20% dividend tax to the government, the receiver of the dividend also pays 10% taxes if they get more than 10 lakhs in a year. So effective taxation on any profit that's made, if you pay it out as dividend, is 30%. This is after you pay 30% to generate that profit in the first place. So it makes more sense to use buybacks. It's a far more efficient mechanism, and I believe that going forward, emphasis is probably for another 3 or 4 years going to continue to pay back because it will service the bond. First of all, if they do 1,000 crores, 500 crores goes to Blackstone and can service the interest, perhaps keep some principal repayments as well. So this, I believe, is going to be the way forward. So in that context, it becomes a special situation in the sense that I believe fixed revenue, that's fact that they have to be for the bond service from add to the factor they're likely to see a lot more buybacks, and perhaps this is an interesting 4-year special situation. All right. Because eventually,
we get the point there. So the hypothesis is that Blackstone is not going to go and sell its stake now, but because it has promised that the payment of those, the coupon rate of 5.3% on the 500 million that they have raised in the debt market to buy at Emphasis is going to come from Emphasis itself, means that Emphasis has to generate that much more cash to give Blackstone that 200 odd crores to pay out the coupon rate till 2022, which means another 1,000 crores of buyback per year till 2022 takes 3,000 crores out, which means the ownership drops by that much. But on the same profit, the ownership dropping means an EPS increment. So all of that put together looks like is working around for Emphasis. And nonetheless, the management itself is very optimistic on the growth potential for the company itself. The stock now at 1,000, so almost 5% higher on Emphasis. Let's take a look at what some of the dealing rooms are recommending at this time. So Yatin Mota and Darshan Mehta are here with their channel checks. Let's start off with you, Darshan. What are you picking up?
Yeah, so the first stock that dealers are talking about is Federal Bank. It's doing well in today's trade. It's up. It's actually flat in today's trade, but the volumes are decent today. Dealers indicate that HNIs are actively accumulating the counter. So we'll watch out for how Federal Bank does behave. The second counter is Repco Home, which is up almost 9%. I spoke to a couple of dealing rooms in which they indicated that the technical trends have been extremely strong. The news of the NBFC that came in overnight with respect to RBI, that also bodes well for the company, so up almost 9%. And Pharma as a space is doing well, and one of the counters that's doing well is Cipla. It's up almost 3%. There's a buzz of a potential corporate announcement that could come in. We're not aware of what this could be, but that's the buzz that we've heard. But Yatin, what are you hearing?
Well, banking stocks are in focus. Yes Bank, of course, we are looking at some short covering which is happening in the stock right now, and dealers do indicate that the stock could see some further short covering in the coming week or so. 5%, 5.5% up for that one. Oriental Bank of Commerce, and of course there have been reports suggesting that the government might look at recapitalizing certain PSU banks, but dealers are suggesting that above the levels of 90 to 91 rupees per share, Oriental Bank of Commerce could see some technical uptick, and that is the reason why they are recommending a buy today, sell tomorrow kind of a strategy, which is buy today and sell it on Monday's session for a profit, according to dealers. And finally, MCX, that is also one stock, 4% up, quite active on the future and option segment. Dealers do indicate that today domestic funds are buyers in trade for MCX.
Okay, Yatin, thanks very much for that. That's our dealing room check for this afternoon. Some more queries coming in, and particularly on some of the beaten down NBFCs like an Edelweiss, a GM Financial. What happens to these stocks now? Let's get in a perspective from Hadrien. Hadrien, whether there's a trade or no in any of these names. Edelweiss has picked up. I mean, this month particular, the month of November has not been all that bad. The stock has recovered almost 20%. What's the sense?
Yeah, I think compared to an Edelweiss and Indiabulls, housing finance looks pretty more interesting. Mainly is because we are seeing a very, very positive relative strength index crossover on the daily charts. Secondly, volume participation is increasing, each day. Thirdly, the base that the stock has been creating in the past 5 to 6 trading sessions is finally seeing, the breakout that we are actually expecting. So, Indiabulls Housing Finance should be a good bet on the upside. In the short term, we could expect anywhere close to 750 to 760 levels in the near term.
Okay. Remember there's flashes on your screen about Shankara Building Products, and the con call is on. It's a stock that's gotten beaten down quite strongly in the last few months, but it's trying to bounce back over the last couple of days. In today's session, not quite. Amansa bought in some stake in the company yesterday, and that's why that stock had done reasonably okay for itself. As we speak, Yes Bank is up about 6%, so strong showing out there as well. I don't think we've spoken to Deepak Shenoy about Yes Bank, but we'll do that in a bit. Maybe it's a good time because it's 3:20 to take in closing strategy, something that we do every day at this hour. So, Manav, I'll come to you first. Your top closing strategy.
See, at the current levels, if you're looking at the charts, Siemens has seen a very good breakout today, and the volumes are showing very good move. The volumes are above 100-day average volumes, and the prices are inching towards its key moving averages. I sense the stock is very well poised and is getting into a fresh momentum. A stop loss of 935 can be placed on the lower side for an upside target of 1000, and the other stock would be Jubilant FoodWorks. The stock also has seen a good momentum going up, since past few trading sessions. That has been forming consecutive series of high tops and bottoms, and today also the stock is likely to see a highest weekly close. So I sense this could also be a next momentum pick going forward. So on the lower side, stop of 1240 for an upside target of 1310.
Interesting. Jubilant FoodWorks after a while is coming into the radar of the trading buys. So watch out for this one. Hayden, what about you? Your top closing strategy?
Yeah, so Grasim would be a stock, for the more conservative kind of traders. I think Grasim is really coming out, of this consolidation phase that it is going through. On the upside, we're expecting short-term target of 890, whereas one can keep a strict stop loss close to 856 levels. Secondly, for the more aggressive traders who would want to be on the edge even on the weekend, I think Yes Bank is, creating very interesting candlestick patterns. Both the patterns in the past 2 days are indicating that we could see further, leg up for a Yes Bank. So I think a more aggressive trader can go for a Yes Bank. In the short term, we could see the stock shooting towards 180, 185 levels as well.
Okay. What's come off today is Bharti Infratel, about 3.5% lower. So do watch that. Tata Motors, of course, continues to grind lower at 172. And as we said, the top gainer today is Yes Bank. Deepak Shenoy, we didn't quite ask you about Yes Bank in detail. What does one do here? The problems out there in the open, the downgrades have happened. A lot of people who've spoken earlier say that downgrades reflect the things of the past. It may not necessarily reflect what will happen in the future as well. That notwithstanding, what would your stance on a Yes Bank be?
So Neeraj, I first of all would like to say that this any strategy here is not for your regular investor. It's for a high risk taking investor because there are lots of unknowns. We don't know what's going to happen. We don't know what kind of regulatory action will happen based on all the news that we've been hearing. We don't know what else is going to come about from news, NPAs and all that stuff. Having said that, much of the capital that Yes Bank has raised in the recent past is good enough for it to protect against a significant increase in NPAs. If it were to be 2x or 2.5, 3x of this, I don't think it would be short of capital compared to the rest of the banking system. It's come down to maybe a 1.5 book, even if you adjust for about maybe 10 or 20% more NPA, or maybe doubling the NPAs also. I think we're talking about 1.5 to 1.6 times book. We are looking at a very strong retail bank. We don't know if the next CEO who comes in is probably, if it's a strong enough CEO who can continue to grow the retail arm and curtail the NPAs on corporate, which are, by the way, anyway coming down. In the sense, the whole corporate ecosystem is seeing a slowing of NPAs and perhaps a recovery cycle as well. I feel that it's a very high risk bet, but you might be looking at a bank that's quite undervalued compared to the rest. Now, I would say that there's a lot more news. There's going to be severe volatility. You might be seeing a 50% fall and more from here, but one has to take high risk bets when such opportunities arise. So around the 150 price mark is where I thought the sweet spot was, and it hasn't gone really down to that level, but that's the thing to watch out for, and I'm hoping that price comes so that more high risk opportunities can be taken there.
Okay, Deepak, Shenoy, we'll leave it at that. Thank you so much for taking the time out and being with us today. Really appreciate your time. Have a great weekend.
Thank you, Neeraj, and same to you.
Thank you. Well, that's Deepak Shenoy of Capitalmind with his thoughts on a few pockets of strength and weakness. One thing that's happened, Devina, is the return of high-quality financial names coming back in the large-cap arena for sure. The HDFC twins, Kotak Bank, Bajaj Finance, the last 1 month have had a stellar run, northwards of 10% for each of these over the last 1 month. Manav, Chopra, between the HDFC twins and a Kotak Bank, all three of which have shown some remarkable gains in the last 30 days, which is the strongest chart?
I think it goes without saying at the current levels, HDFC really stands out for a simple reason that, the stock has continuously been in a very good primary uptrend, and you may not see a very good risk-reward ratio for a short-term trade here, but, eventually the long-term trend is very much intact. I sense, the prices are very well poised to even exceed its highs and eventually move towards the 2200 levels in the medium term perspective, and this could be possible in less than 1 or 2 months time. So the momentum is definitely very, very well placed with the HDFC. Kotak would be a good play only when it comes to the short term. It has observed a good breakout which has happened, but on the upside I think 1300 could be the resistance level. So for a short term trading bet, I think Kotak could be played. The stop loss for Kotak can be placed at 1200 for an upside of 1300, but for a medium term perspective to long term, I would definitely put my bet on HDFC Limited.
Our com is up about 13%, but Hadrien, Mendonca, 2 or 3 names. You give us a view on any of these. By the way, Emphasis is one too. We spoke about it in the morning. Right now we had an extended chat. That's up 7%, but that's one name. But look at Monsanto, look at Alembic Pharma, and Ramkrishna Forgings. Okay, not Ramkrishna Forgings. Monsanto and Alembic Pharma, maybe a Procter & Gamble and an Emphasis. 3 or 4 names. Any one of the charts, Hadrien, that looks good, because all of them have surged in the last few minutes of trade.
Yeah, so out of all the 5 names that you have taken, Emphasis is something that is looking, one of the best picks among all. I was just looking back when you were having a long chat on Emphasis. If you go back to 2015, the 100 weekly exponential moving average has not been broken. Currently, the downfall that we've seen again the mean reversion to the 100 weekly exponential moving average. So I think it's a very, very good time to bottom fish emphasis around these levels. I think it can get back to at least 50% retracement of the entire correction, which takes emphasis back to 1150 levels. So keeping a strict stop loss close to 920 odd levels, 1150 seems to be a very good risk reward ratio. So one can go ahead and make a delivery buy on emphasis even at these levels.
Okay, stay on, gentlemen. I will take in closing thoughts from you, but here's how the markets are shutting shop. Fifth day on a trot, the indices are ending in the green. This must have been the first time in a really long time that we've had this. But strong days, all of these except for today. The Nifty Bank has underperformed. The mid caps and the small caps, though, have done well for themselves, outperforming the large caps, which is a deviation from the case in the last 4 days. Devina will speak more about that. Let me try and talk about the large caps first and what's happening out there. So gains to Yes Bank about 6% higher. Wipro has gained about 3%, not bad going. Tech Mahindra is amongst the others. So selectively ITs had a decent outing. Cipla, Dr. Reddy's are amongst, and Sun Pharma are amongst the pharma names which have done well. And Kotak Bank as well as HDFC from the financial side. So broad-based rally in the session today. A clutch of sectors have participated. OMCs and both HPCL as well as BPCL have had some pain today. Bharti Infratel has corrected today. Tata Motors with reason is down about 3%. And some weakness seen in the commodity-based names like JSW Steel and Vedanta. They have corrected a little bit in trade today. But what about the mid caps and the small caps, Devina? Outperformance today?
Well, most definitely, considering the last few days have been a period of underperformance where the benchmark indices have done their fair share bit, but not the mid caps and the small caps. So today, they're sort of pulling up their stocks. You've got a stock like Monsanto, which is doing extremely well by the close. 30 seconds left to go for market closing. Double-digit gains coming in, closer to 10% odd for Monsanto. You've got an emphasis, and we were talking a whole lot about this counter and how there is a likelihood or a possibility of an angle of future buybacks as well for this counter. It's crossed 1,000 now, almost 6.7% higher by close. Godrej Properties does exceedingly well today. Along with that, even a Prestige Estate picks up in pace. So the real estate flavor coming back. Housing finance companies, so Repco Home, that does really well. Divan Housing Finance, that does really well. Both these counters gaining anywhere between 7 and 8 odd%. Stride Shashun is the other one from the mid-cap space that does okay for itself, and RCom 13% gains by close. Amongst the losers, Oil India, that one's down about 8 odd %. Remember, yesterday was the last day to own the Oil India shares if you need to be eligible for the buyback. PFC REC, both these counters, another 5-6% given up. Remember, post the Bloomberg news about their merger, both these stocks have taken a heavy knock to the chin. Sun TV, Dish TV, both of them down, as well as a PNB Housing Finance. While we were talking about other housing finances, Repco Home Finance, the management clarified that this probably is not a very big step for them because they don't go in for securitization. But a PNB was expected to do slightly better, but it hasn't. Nonetheless, the overall picture for the broader markets is that much more better in today's session. It's the end of the week, start of the new series. For the indices, a really swell run this entire month. And the week particularly, not a single day of losses coming in.
Yeah, I think that's probably the big takeaway to my mind, really. But we'll talk about the week in a bit. First, today's session and what's happened today. Decent outing for the Nifty and the Sensex. Let's get the turnover. It's the first day of the new series. You typically don't have very high FNO turnover, but the cash market turnover, quite remarkable. Actually, even the FNO turnover, the first day of the new series, Devina, it's not too bad.
It's really good to see that there is more cash market activity. If you see for BSE cash, a number of 3,000 odd crores is what you would see in a typical day. And for NSE, closer to 33,000. So it's surpassed on both counts.
Yeah, and last 5 days of gains, FIs have pumped in 6,100 crores. It'll be interesting to see what's the number looking like today. But the cash market numbers certainly fairly encouraging. Bring up the market breadth, should be positive today. It converged midway and almost even Steven, but marginally in favor of the advances.
Let's take a look at the week gone by and the contributors thereof and how it shaped up for the index. I think this is today's contribution. So in terms of points, HDFC, that's up, Kotak Mahindra Bank, Yes Bank, the entire banking lot there doing okay. ICICI Bank for one gives up a little, some profit taking on that counter. ITC and HUL looking a little weak.
Yeah, let's bring up the MRR function and let's look at what's happened to the Nifty the last 5 trading sessions. And well, that's interesting. IT right up there, Devina, but some financials have come back, as we've been saying. So IndusInd Bank, Bajaj Finance, HDFC Bank. Well, when heavyweights like these are participating, no wonder that the Nifty has a 3.5% gain.
Yeah, and the usual suspect there, Yes Bank, right at the bottom of the heap, down by about 13%. Today's move should have probably lightened the burden a bit more on the stock. ONGC, though, down about 7.7%.
Yeah, and the mid-cap and the small-cap indices, and let's see what's happened there. Do some NBFCs feature there, or is it a completely different set of stocks? Should come up on your screen, the Nifty 500 or the Nifty mid-cap index.
What a stark underperformance to the benchmark index. But primarily on the back of those large heavyweights that we were talking about. So some of the names that are doing well, real estate kicks in from the mid-caps and the small-caps. And a few of the pharma names, not all that great there. And an REC and a PFC, obviously, the news that we broke about their merger not being taken too kindly by the markets.
Yeah, I think that's the Bloomberg impact, to be honest, the Bloomberg news impact. The gaining side, I mean, I think the one thing that stands out, or two that stand out, one of them is Adani Power, of course, up 15%, and Emphasis gaining about 10%. So two names that, to my mind, kind of stand out in amongst the list of gainers. Nevertheless, final thoughts from our experts. And Hadrien, let me start off with you first. How does this set us up for next week? Are we overstretched, and would you expect a bit of a pullback, or do you expect this rally to last?
Yeah, as I had earlier mentioned that, we could see a little bit of consolidation after such a strong move on the upside. The question here is that will the mid caps and the small caps try and play a catch up? That's what, we saw the deviation, with the large caps slightly cooling off, with mid cap, small cap trying to make a strong comeback. Next week would really, decide whether that's going to happen or not. But I think one cannot ignore the strength that we're seeing in the top large caps that have been the top performers. As I would like to reiterate, Cipla should be a stock that should be on a buyer radar. Reliance Industries, HDFC Twins, they continue to look pretty strong. So I think, and Kotak Bank. Not forgetting these large caps, I think they should be good trading bets in the next week going forward.
Right. Manav, what about you?
See, the markets actually has seen a very good breakout. A weekly close above 10,800 has opened a lot of, it has closed above important hurdles. And if you look on the weekly perspective, I think we have already given a breakout after 3 weeks of consolidation. So I sense if there is a consolidation, could happen only for a day or so, but eventually this momentum is going to move on the upside, and 11,250 could be the levels that one can start eyeing. I think by next week we could see the levels of 11,000, and eventually one needs to maintain a buy on dips approach. The support for Nifty would be at 11,700 on the lower side.
All right, gentlemen, thank you so very much for joining us this Friday afternoon. Appreciate it, and have a good weekend. All right, and with that, it's a wrap on this edition of Countdown from Neeraj, myself, and the entire team that's put the show together. Thanks a lot for watching.